Hi folks, welcome back. Hope you are doing well. Today we have a lecture 18 of ICT A to Z beginner series. In today's lecture we are going to learn what is the ICT Silver bullet and what is the time frame, what is the strategy and what is the liquidity. So make sure you watch this video till end, and if you are new to our channel, make sure you subscribe it and join our Telegram. You will find the all related links, important links in the description. So basically ICT Silver bullet is a time based strategy in where a specific time you will find a specific setup in a day. Okay, so what is that? First of all, you have to note the Silver bullet time frames. First one is a 3 a.m. to 4 a.m. London session, 10 a.m. to 11 a.m. New York session, 2 p.m. to 3 p.m. New York session. So the time I am stating here all is going for UTC -4 a New York time. So make sure my all lectures and all videos and all ICT setups only and UTC -4 New York time. Okay, so whenever I'm talking about any time frame, so make sure your time frame should be set on UTC -4, and I am only talking about the New York time. Okay, so wherever you watch the video from anywhere in the world, so your time should match accordingly. So there are 3 time frame in a day where you will get this setup. So 3 a.m. to 4 a.m. the beginning of 3 a.m. and the end of 4 a.m. This is the time period of 1 hour that you will get the setup. This setup happen every day. It might be not in your pairs, it might be on not in Forex pair or specific asset class, but it will be available. You will see these setup happen almost every day, okay, in the asset classes. Okay, so it doesn't mean that you should enter and exit on this specific time frame. Your entry should be in this time frame, but your exit can be delayed. It can be run after this time frame. Okay, so first of all, make sure you note the time frame: Silver 3 a.m. 4 a.m. and then New York 10 a.m. to 11 a.m. 2 p.m. to 3 p.m. Okay, this is the first thing you have to understand. The second thing, after what criteria you will get this trade. Okay, the thing is that the liquidity, the ICT all think based on the liquidity. So what is the liquidity? It can be your previous day high or previous day low sweep. Okay, it can be your previous session high or previous session low sweep, or your internal liquidity, external liquidity as well. The new week opening gap if you are trading on future, optimal trade entry, your previous week high or previous week low sweep, the PI of higher time frame. It can be any PI. It can be order block, mitigation block, a fair value gap, internal liquidity, external liquidity, all criteria that I teach you in this ICT beginner series. Okay, so make sure you watch this all videos. I already make the playlist on my YouTube channel, and make sure you subscribe my YouTube channel and watch the full video till the end. Okay, you will learn many things in coming days. Okay, so now let's get started in this video. I will explain you what is the things here, and also after this video I will post more 2-3 examples for ICT Silver bullet. So after some lectures, after some time frame, I will start a live tape trading, and I will execute the live trades on my accounts, okay, on my personal accounts, and you will see the results by your own. And I will also introduce my own strategy that is not by ICT or another thing. That's my own strategy. That my strategy that you see in my Telegram channel. I post the I post signals on gold and US oil on the base of my strategy that is not related to the ICT, but I combine ICT and my strategy that can boost my more accuracy. Okay, so let's get started here. So what is the thing is, so any liquidity sweep, for example, this is any liquidity. Okay, after the liquidity sweep, like here, you see the liquidity sweep, we will see a aggressive market structure shift. Okay, and we will find the fair value gap on this leg. Okay, like ICT 22 model, I explained that in the last lectures, and the liquidity. Okay, the entry of this area where you enter should be in the time frame, that time frame. Okay, at some time what happen, these market structure shift can happen before your kill zone hour, but entry can happen in the kill zone hours. Okay, I will explain you in the video. Here is one thing more I will tell you, that if you do ICT Silver Bullet trading with your daily bias, it will be more benefit for you, really. Okay, so I'm in the gold because I'm the gold lover. It can be your any pair. I told you ICT Silver Bullet happen every day, and you have a 3 time frame, not a 1 time frame. If you don't get trade at London session, you can get a New York AM session or New York PM session. All right. Okay, so what's the thing? First we have to mark out the time, 3 AM, the first thing, and we have to mark out a 4 AM New York time frame. Okay, this is the first time period. Second, we have 10. Okay, sorry, we have a 10 AM and we have 11 AM. This is our the entry area. All right, and then we have a PM session, 2 to 3 PM. Okay, okay, so the time frame I suggest you, and ICT personally trade on 5 minute and 1 minute basically on this setup. It can be 15 hours as well, but not recommended because of lack of more price action. So that's why. Okay, so as you see, price are bullish on a daily time frame. It was a bullish on a gold. So if it was a bullish, you have to only trade a bullish trade, but you can take a counter trend after the liquidity will sweep or tap on some sort of area. Okay, so I teach you the internal range liquidity and the external range liquidity. You know, the internal range liquidity is the our BC and CB, like buy side imbalance, sell side efficiency, and sell side imbalance, buy side efficiency. In 1 hour and 4 hour, you will see the more here like this imbalance. Okay, after price tap on some sort of imbalance with a mitigation block, you see, once I remove, you see here, this is our block. Okay, we have this fair value gap in a 4 hour, and price once tap here, if we see, we want to see that did we have any sort of our kill zone hour, any silver bullet time frame. Once that price did, you have to wait the ICT 22 model. You know, liquidity, tap on some sort of liquidity. We have this swing point, market structure shift with displacement. We have this fair value gap. We have this fair value gap. The first priority 1, 2, 3. So our money management have to be that price can reach to the upper fair value gap. But we will take entry on the consecutive approachment. We have the liquidity of this internal imbalance efficiency. Okay, so this is the counter trade. But as you know, as you see, price's bias is bullish. Okay, so what we have here, price tap on here, what give us a market structure shift. Okay, you see this is a valid swing point. We have a fair value gap. Okay, and we have a we have here fair value gap as you've seen here, and we have this the liquidity. We have this liquidity. Okay, so as you see, you can only enter on this specific time frame. Okay, but you can hold a trade until your liquidity have been swept. The first target will be your here. This is the internal range liquidity, and this is the external. So ICT also state one thing more, that on forex pair, the minimum minimum framework, this work should be 15 pips. Okay, and on indices the 10 handles or 40 ticks. Okay, so it doesn't mean that from entry to exit should be 15 pips. That mean that all this time, this framework from here to here should be in 15 pips. Okay, so then it will be a more accurate, and it will be more generally go to the liquidity where you're seeking for. Okay, so this is the first thing. Then we have to go for second time frame, the 10. Okay, as you see in here, price take the internal liquidity here on the time frame and aggressively move. We have, if you see here, we have this market structure shift. Okay, and after this shift we have this fair value gap, price tap on it, and we have this liquidity. Okay, but if you go to the 5-minute time frame, you also get this thing here. As you see in here, we have this fair value gap here. Okay, and price tap on it, and we have this liquidity. So many people, what they did, once the fair value gap has been used, they are never going to trust again. But not like that. ICT himself said that price can reprice again that fair value gap, that imbalance, that BC or CB, whatever that. Okay, it can price can came again and repricing that area and go to the downside. But the main thing is that if these fair value gap start from here to here, these candles should not close above this fair value gap. This point you have to note it, folks. Okay, listen, you have to note this point, that should not close above this one, because the bodies that represent the price action, not the wicks. Okay, so these wicks can be acceptable, but if body close above these fair value gap, then the scenario will be a different. Okay, so here, and we have the liquidity that can be targeted here as well. We have, you see, a market structure shift with displacement. Okay, and we have this fair value gap, we are in the time frame, and we have this liquidity. Okay, that's all. So in the next video, you also I will represent the more examples on different markets. So make sure you subscribe our YouTube channel, and if you want to join some good brokers and the prop firms, I will give you the link in the description, and make sure you join our Telegram, because also I share there my personal signals that made by me, my strategy, and have a very high win rate. Obviously after this ICT series, I will going to tell you my series, and make sure you join our channel, because in the future I will start a live tape reading with the live account, and you will see the results. Hope you are doing well. So until next time, be safe.